The reason why I do a soft credit pull is because when you do a hard, it's going to impact your credit negatively. Every dialer in India, Mexico, China is going to know that you got your credit pulled.
Oh, so it's a spam.
You'll get 500 phone calls in like 24 hours. You guys are paying right now $3,200 in rent every single month. Are you saving $800 a month?
It's impossible because you're just like stuck in a cycle.
How can you afford a $4,000 mortgage?
How can we afford?
Something's got to change.
I love the education and the transparency.
We just hear rates and we're like, what is? I mean, how you were saying, like the lower rate, it doesn't make sense because in the long run, you're not.
It just doesn't make sense right now, especially on an FHA loan. I can pretty much guarantee that we're going to be able to get all your closing costs covered. All right, guys. Today we're going to try to pre-approve Diego and Gladys for an FHA loan for $500,000. We'll see what happens.
It's good.
All right. We've been talking about doing this for years.
Aww.
And it's like, okay, this was just everything came through.
Yeah.
I'm doing your pre-approval right now.
So when I do like that free credit report, what is that? Is that based on one credit score, right?
Yeah, it's just like a bureau that you can pull. It should give you all three bureaus: Equifax, TransUnion, and Experian.
Which one's the most like?
So we use the middle of the three bureaus.
Oh, middle of the three. Okay.
I pulled TransUnion as a soft credit pull because that's generally the harshest one.
Oh, okay.
And so then I'm like, well, if I have like worst case scenario and you're still good, then I don't need the other two. The reason why I do a soft credit pull is because when you do a hard, it's going to impact your credit negatively.
It's going to be a hard.
But also, like every dialer in India, Mexico, China, everywhere is going to know that you got your credit pulled.
Oh, so it's a spam.
And you'll get 500 phone calls in like 24 hours.
Oh, wow.
So one of the things I have everyone do is I have you register for the do not call list. Because you register for the do not call registry. When we do get to that point where it's time to run your hard credit report in 7 days, 8 days, 10 days, then you won't get those spam calls. Because it's brutal.
Yeah, it's crazy.
I mean, I get them all the time right now. I'm like, I don't know where they get. Yeah, where they get all that.
Because if you ran your credit for mortgage,
well, we haven't done.
But
mortgage.
even before then,
it's
been like at least a good couple months.
Yeah, it's like crazy.
Yeah, it's
3 to 4 times a day you get calls. So I'm like, what the?
Yeah, because what happens is the bureaus, they sell your data because that's how they make money.
Oh.
So it's not just they make money off of us like running credit because they charge us every time we run credit for somebody. But what they do is then they sell the data to individuals like myself. If I wanted to like buy people who got their credit pulled, I could pay $1 per contact, and then I would just have someone blow you up until.
Crazy, huh?
You know, data is worth more than gold right now.
Yeah, it's crazy.
What purchase price like really are you guys looking at?
What do you want to keep it under? Like
at least I guess a payment under like 4,000 would be amazing.
Okay. I think that's the most important part.
He says he probably wants to go a little bit lower, but I'm like, ideally, that's where I feel like the market that we're kind of in.
Here's a good question, right? Like you guys are paying right now $3,200 in rent every single month.
Yeah.
Are you saving $800 a month?
No, it's impossible because you're just like stuck in a cycle.
So how can you? So then the next question is, how can you afford a $4,000 mortgage?
How can we afford?
Yeah, like if right now you pay $3,200, and then you want to pay $4,000, that's an $800 gap.
Difference,
right?
Yeah.
So if you were saving it at $800 a month, then it's like, okay, we can afford the $4,000.
Yeah.
So then something's got to change, right?
Yeah, for sure.
It's either a lifestyle change.
That for sure.
The cool thing is your $500 car payment's about to be gone.
Yeah, and I guess that's what I was like thinking about. And
I mean, we have that's like another
a little gap
expense that we do.
Daryl's gonna have to bust out some overtime.
I know, and I think it's just the spending. I think it's the lifestyle. Honestly, that's what it is. Like I feel we just got stuck in a little cycle.
That's the biggest thing, you know.
Yeah.
I think no one teaches us. You guys are Hispanic like myself.
Yeah,
you guys never go like, this is how to budget, dude.
Yeah.
It doesn't work like that. I mean, I'm going to show you guys right now some payments. You want to ask me some questions? Like, what are some questions you have as you're going through this process that I can answer for you before I like just start kind of talking?
You have a lot of questions.
Like, well, I mean, as in like, what?
What do you have as far as questions in regards to the housing market, to loans, to?
I think my biggest thing was like with the down payment assistance, like how I mean I read a little bit on CalHalf and all that stuff. Like how does it? I mean, is that
How does all that work?
I mean, is that worth to use, or is it more?
Yeah, it's a good question. So it just depends on it depends on your needs, right? Like I'm always a big proponent. If you can come in with your own down payment, come in with your own down payment. Because the way CalHAFA works is they can give you up to 3 loans.
Oh.
But they're going to give you the mortgage, right? Say it was a $500,000 mortgage. So your down payment was $18,000. So they'll let you borrow the money for the $18,000.
Yeah.
And what's cool about CalHAFA is you don't have to pay on this.
It's like interest free, right?
Second.
Yeah, like a second.
Yeah, you have such little interest, you can call it interest free. And then they can even let you borrow money for the closing cost. The reason they do that is because let's just say closing costs on a $500,000 loan are $12,000. The closing costs on a CalHAFA loan are $22,000. And the reason why is because when a lender does a loan, the lender gets paid by so me as a broker, I get paid by the lender.
By the lender.
Right. So if my comp with them is 1.5% or 2%, whatever that comp is, they pay me that. When we do a CalHAFA loan, we don't get paid. So the broker puts their fee on the front end.
Oh, okay.
Right. So if they can charge up to 3 points. Right, if they were like greedy, they can add 3%, so they can add $15,000 into your closing costs on the front end.
Okay. Oh, on the front.
On the vice versa, like a guy like myself, I might charge anywhere between 5 to 10, depending on the complexity of the file and how much time it's going to take. And so, the challenge is that because rates are a little elevated right now, with CalHAFA, when rates drop, you can't hit that streamlined refinance on an FHA loan, meaning you can't just refinance a loan without paying off that second.
Yeah, paying off that, yeah.
And so if you just come in with your down payment, and you get, let's just say you get lender credit to cover closing costs, then as soon as rates drop by 1%, you get that call from us like, hey, it's time to refinance, and we just lower the rate. Your payment could drop $400 or $500. Okay. So it's always... in my opinion, it's always in the best interest of the client to come in with their down. No, there's people who are like, I just don't have money, dude. Like I'm making a ton of money. Yeah. I'm just not, I don't have 20 grand. So then in that position, then I do the down payment assistance. I also have like a grant program where they'll give you the down payment. And if I negotiate enough closing costs, you can get into the house with $5,000. The challenge is the rate is nasty.
On those.
So it's like your payment for 6 months for 6 payments is like $400 or $500 higher. You actually still end up making some money, but so there's good and bad to everything. And I'll show you right now. I'll pull up an Excel sheet. While we're on the rate topic, you guys want to see rates in lifetime? Sure. You guys want to see the secret sauce here?
Because it seems like the rates are going to come down.
Yeah.
I mean, I've been looking at. I mean, I've been seeing like more of the political stuff on that stuff and. Yeah, and the whole stuff that's coming out, it's pretty crazy.
They're pushing.
Because Jerome Powell's done, and that's like
he's done in May of 2026.
But do you hear today, right? What happened?
Yeah, they just initiated him to the DOJ.
DOJ,
yeah. Hey, Florida don't mess around.
That's pretty crazy.
So check this out, guys. So I have the ability to. So I'm a broker, right? So I don't work for one institution. I come from banking, which is I couldn't do. So right now I've selected about 16 different lenders, right, based on this criteria. An FHA loan for a $500,000 purchase with 3.5% down. You're buying a primary residence, single family, meaning it's not a condo, it's a stick-built home, 30-year fixed rate. Now this is key right here. See where it says comp payer? This is what I was talking about. The lender pays me, or I can make it to where you guys pay me. In this position, we're saying the lender's paying me. And then these are the lenders that we're going to pull pricing from. Now, when you see rates come up, you can see pretty much every lender. Now, it's already past hours. That's why you see the expired. But look at every lender, right? They're all pretty much at the same rate. Now, you could even see here, every lender we have our comp structure with. So built into the rate is how much the lenders pay us to do a deal. Does that make sense? And so when you're out shopping, right, and you're like, well, why is one rate lower than the other? Well, the reason is it's because of the different comp,
They have
right?
different comps.
The higher the comp, the higher the rate. Now let's look at so I'm looking upside down. We'll just select this first one. All right. So when you're looking at pricing, right, you have to be cautious of like the different teasers that are out there, because someone who's unscrupulous can say, I'm going to give you a 5.25% rate. they won't tell you is they're going to charge you $16,000 for the rate. Inversely, what I like doing is I'll say, okay, well, what if we take a 6.75 rate, but the lender gives us an $8,000 credit for closing cost? Right. And so then that helps offset your cash to close. Now, who wants to pull out their phone? Do not. Oh, she's got one phone. We're down one phone. Okay. So see this 6125 right here? This number right here. Okay. So here they're giving you a credit of $421. So let's just say that's zero. Principal and interest, this doesn't count taxes and insurance, is $2,983. Principal and interest on 6.75 is $3,184. So do me a favor, do $3,184 and then subtract that from $2,983.
201.
201. Okay. Can you remember that number?
201.
All right. 201. And then take 8,328 and subtract out 421.
021.
421.
7,900.
Then just hit equal so we get that number. So that's how much
79.
less that rate is, right? Because they're giving you that much more. Okay, so now divide by 201, right? So 39 months. So it would take you 39 months of holding that mortgage to basically break even by taking the lower rate. Does that make sense?
Yeah.
So by taking the higher rate, as long as you get rid of that loan by the refinancing or selling your house within 39 months, you make money by taking the higher rate and taking the credit from the lender.
Makes sense.
People think that as a lender, we get paid more for higher rates. We don't. It's all the same. It's highly illegal. But it's a good strategy to use when we're in a position where like, hey, Tony, I just want to get all my closing costs covered. No, it's a buyer's market right now. So you have leverage. With the builders right now, we have a ton of leverage, right? Because what'll happen is they'll have you use their in-house person for the loan and you guys are going to qualify for it. And so when you go through that process, and I'll guide you guys through the whole thing, they're going to throw insane incentives, whether it's buying down the rate permanently or doing a 2-1 buy down or whatever that may be.
Whatever they're giving out.
Yeah, whatever they're giving out. And so we'll want to leverage that to the best of our abilities. Does the rate portion make sense?
It makes sense. I love the education and the transparency.
Oh,
because sometimes we're so like.
I mean, we just hear rates and we're like, I mean, what is? I mean, how you were saying like the lower rate, but then it's like it doesn't make sense because in the long run you're not.
Yeah, you can do the same equation, right? On the other side.
Be on the,
and then it'll be 39 months to break even because what you're doing when you're buying down the rate is you're prepaying interest for a certain amount of time. And so then, it just doesn't make sense right now, especially on an FHA loan. You're going to get rid of that and flip to conventional at some point. I don't know why I set up this thing so I can call and text on my computer, and now it doesn't hang up on this poor person. It's been on for 2 hours. Like, we don't want him on us for 2 hours. All right, guys, I'm going to flip to the loan and just show you guys. Okay, here we have all of your liabilities, right? From the car, which is less than 10 months. So anytime you have a debt that's going to be paid off in less than 10 months, we don't count it against you.
What doesn't count as?
And then you just have some minor debts, right?
All my travesuras.
Yeah. Ya ves? I'd probably have you start like just paying off all these small ones. Because every credit, like, see all these little hits? This is all a hit against what's called your debt to income.
Okay.
And so we want to start paying these off. So on these, we're not going to get there. So, like, let's start with the smaller ones, and I'll send you some snippets afterwards. And then you pay this one off, and you pay that one off, and pay that one off, that one off. And you just go through it, but again.
You're like, what?
Damn.
He's like, I wasn't aware of all this.
Damn, I'm sorry.
Just kidding.
She got exposed, bro.
That's it. You guys ever seen this guy, Caleb Hammer?
I don't think so.
TikTok? Oh, man, that's all he does. He just wrecks people. He's like, you spent $50,000 on OnlyFans? Like,
that's wild.
Yo, I had that happen once.
That's funny. Wait, why is Diego's subscription there? No, I'm just kidding.
Oh, my bad. I didn't mean to bring you out like that, bro.
Look at mine. It's like 2 compared to the what?
Yeah. That's it. She's making dinner for a week.
I paid them off like a couple times, but I've always used my finances.
Yeah.
Just not.
I try to like.
Bad.
this is how I coach people with finances. Like, if you have a lot of credit cards, you do a lot of stupid spending.
Yeah, for sure.
Offense.
For sure.
And so, like, I have my business. I have, like, my personal pendejada credit card. Like, I went to Vegas. And then I have, like, my daily stuff, which is, like, gas, groceries, like, all the other
necessities,
miscellaneous stuff. And then I make sure that my entertainment one never has a balance because, like, I can't pay interest on me wanting to go to whatever it was, right?
No, yeah, makes sense.
And then I'm blessed enough to where everything gets paid to zero, but that's how I split it. And then that way, I'm never, like, too spread out. And then if I want to take advantage, like, I bought my niece a laptop at Best Buy, and they had, like, a 0% interest. And so I have a Best Buy card that I never use. I don't even know where the card is. And so, like, when I went to Best Buy and I was like, oh, I'll take the 0% interest. And then I bought it on that card, but then the next month I just paid it.
Yeah.
Because I don't want to carry balances on a ton of stuff because that's how you lose track of it.
No, for sure.
Okay, if you want to keep your payment at around $4,000, right now it's at $4,102. That's a purchase price of $500. Your down payment's $17,500. It's a FHA loan, right? The way it breaks down, now, I put property taxes at 1.8% because on the new builds it's really heavy. Your monthly homeowner's at $150, and then mortgage insurance. Now, what you got to watch on FHA is there's two types of mortgage insurance. There's the monthly premium, which is in this case $220, and then they charge $1.75, which they add to the loan balance. So if you go $500 minus $17,500, which is 3.5%, that's $482, and then they add $1.75 to your loan amount. And that's every FHA loan. All right. At $500,000 at a rate of 6.125, you're at $4,102. You guys qualify for that easily. You see these numbers right here? This DTI, that's called debt to income ratio. That's my entire job. Okay. Right. FHA allows for this number on the front end to be 46.99 and this number on the back end to be 56.99. Right. You guys are well within the qualification limit. Without overtime or any other types of income, you're at $11,700 per month, right? That's pre-tax. Given your payment of $41, your monthly expenses, not including the car, at $989. That gives you all total payments at $5,091 versus your $11,007. The bank's gonna feel comfortable. You guys are pre-approved.
Awesome.
Easy.
Awesome, yeah.
You could do a Cal half loan if you wanted to.
It's nice seeing
the numbers.
You didn't see this before?
No, nothing. At all.
It's because, we're different out here.
Yes.
We're different out here. You guys like this?
Yes.
Oh, yeah, definitely, yeah.
Okay, so the way Cal Halfa works, right? They're offering a rate of 6.375, but you're stuck until, like, you can't refi out of that until you basically either get enough equity to pay that off, and then when we do it through a refinance, you pay it off in cash, or you sell the house, right? But depending on, I didn't look it through your bank statements or anything, so I don't know how much you guys have in cash or in liquidity. So that I can't make a judgment call on whether you should do DPA or not. Okay. I can pretty much almost guarantee that we're going to be able to get all your closing costs covered. Okay. Right. Even if, just so you see the comparison, even if I have to pay for it, right, with the lender. So check that out. If I did the higher rate with the lender credit, you'd be at 4304. But we'll get your closing costs covered one way or another.
Okay.
Closing costs on a typical transaction like this are anywhere between 10 to 15. You automatically got 2,500 for me, right? Assuming I'm doing the loan. And then we'll make sure we negotiate the rest, whether it's I negotiate with the builder or I negotiate with the seller because you just want to look at regular houses.
Okay.
If you guys want to see any houses on here,
sure.
See if we could price them out.
Yeah.
Do you have any on Zillow that you favored?
I guess all the ones I was looking at, they're probably they're over the 5s.
You qualify for more. Y'all just got to have that conversation.
Okay.
Like, if our payment's $4,500, we're gonna eat a cup of noodles.
And I guess which ones were the KB homes we were looking at? I'm bad with addresses and
those were
locations.
Closer to the 74 on Ruse.
And then we did like the DR. What is it? The DR. They're in Winchester, but there's like 2 different communities. Some look like little townhomes. They just seem too close. And then
the community that we had looked at, it was like it was like a single family home, but it seemed more like a condo. It was more like condensed, like like cookie cutters. Like,
Yeah.
Like
that's how it goes.
And it had like the road on that street was like a one way only. Like it was really tight. Like it wasn't spaced out. I think those were the DR, huh? The DR Horton.
But then there were some right in that same area.
In that same area, they're building more. Yeah.
I'll show you guys like 525 just so you see that. How many bedrooms and bathrooms?
3 bedrooms would be awesome. 2 restrooms would be awesome.
I'm a numbers guy first before. And then I'll send you guys like an Excel sheet and it'll say like 500, 525, 550, 575.
Okay.
And you'll have all the different payments and then I'll send you like FHA and CalHFA side by side. That way you guys know.
Okay.
And then if you guys have 401ks, like you can tap into your 401k for the down.
Yeah, I have 401k and I have ESPP right now. I don't know if you with employee purchase, stock purchase plans. Yeah. Like full money too.
Yeah. So if you guys went to 525, your down changes to 18,375 and then your payment goes to 4,300. So you got to keep in mind the HOAs on these properties.
Yes.
The HOAs, yeah.
All the different stuff. I mean, like if I just filter on Zillow real quick, right? For 525 I think I did 550 as a cap for 3 bedroom, 2 bath. I mean, there's a ton in your price point. And so I'll look at some builders. I think I don't know if TriPoint already sold out, but I did a couple deals in there. And then I'll start trying to figure out what are some good locations for you.
Okay.
I'll probably have my nephew. He's a realtor as well, and then I'll have him like set all this up.
Okay.
So I'll add him to our group text.
All right.
Yeah, there's a ton of opportunity. I have a good plug at Lake Elsinore KV Homes. I'll call her and I'll see if they have any good deals going right now. But that's a good price point. Like, as long as you're open, you'll find a pad pretty easily.
Okay.
And then the final thing, you guys have any questions?
To be honest, I don't.
Does all the numbers make sense? You guys feel comfortable?
Yeah.
Feel more confident?
Yeah.
Yes, for sure.
Just a visual gives you more of a.
Yeah.
Because we were a little like blindsided and just kind of being coached on like not this, not that, and we just felt a little.
Yeah. I think we lost track of the in-person stuff, and it's so helpful.
It definitely.
Yeah.
I mean, that's it, guys. You guys are, boom.
Ooh.
You guys are pre-approved, so you'll get this pre-approval letter from me in your email.
Okay.
And we're ready to start shopping. I'll have Mark set you up on a home search.
Okay.
Get that $2,500 credit from me. You guys are fucking on it, ready to shop, and congrats, guys. Thanks for doing this. Thanks for trusting us.
Yes.
Yeah.
Awesome.
Any other questions?
No. Excited. Yeah, I'm good.
It's game time.
Yes.
Now you can walk. Now the cool thing is you open a door now.
Yes,
you like
for sure.
know the payment. If you see any houses that you like, doesn't matter when or what time, like text it on our group thread, and I'll send you what the payment is.
Okay.
That way, because I'll look up the tax rates, because Riverside has special assessments on every house.
Okay.
And so you want to know what that tax rate is for that house. Some of them are like 2.5%. Some of them are 1%. So that's going to give you a different spread as you're looking at properties.
Okay.
All right. Congratulations.
Thank you, man.
Cool.
Appreciate
Thank you so much.
Thank you, guys. That was awesome. Boom.